Hey everybody, welcome to Mortgage Today for Thursday, December 21st, 2023, and what a day it was. MBS are in the small green numbers this morning. The 6.0 coupon was up 8 basis points, the 5.5 was up 2 basis points in the first hour of trading. There was minimal reaction to the data in the first minute after its release, but that was given way to modest improvement early. MBS weren't following at first due to illiquidity, but that MBS weren't following initially due to illiquidity, but that got resolved. The jobless claims came in at 205,000 on a 215 forecast. It was 203,000 previously, so jobs are staying resilient. The Philly Fed Index came in at negative 10.5 on a negative 3 forecast. It was negative 5.9 previously. The third quarter GDP was revised downward from 5.2% to 4.9% in the third revision. Importantly, the inflation numbers were revised downward again, with the core PCE rate, excluding food and energy, falling to 2%, which is the Fed's target. Philadelphia Fed President Patrick Harker added to the rate cut conviction Wednesday, saying that it's important that interest rates head lower, though he cautioned that the central bank should not move too fast and not right away. Markets are seeing low trading volume this week as expected, with many traders taking the end of the year off. Tomorrow morning we get the PCE inflation data, the Fed's favorite gauge of inflation. Normally we say I don't expect it to cause much movement, but the bonds are showing a bit more movement lately due to low trading volume. It could cause a bit more movement than usual. With the current momentum, it is likely that it would be good for bonds. However, rate chief may not see much of an improvement. Most lenders will price conservatively tomorrow as the bond market closes at 2 p.m. Eastern Time and is closed Monday for Christmas. There's quite a bit of discussion in the news and on MBS Live surrounding a few interesting questions regarding the Fed's apparent pivot to a rate outlook. Does the Fed think about politics? Was the pivot a surprise? Was it justified? If it's an unjustified surprise, is it therefore political? Because today's trading session offered so little in terms of market movement to analyze, we've instead turned our attention to addressing these more interesting questions in the recap. This isn't meant to be an exhaustive analysis, but some quick thoughts is that the Fed's hawkish acceleration in the September dots is more than an outlier than the June or December dots. September's defensiveness is pretty easy to defend given the shifts that were happening at the time, both in inflation metrics themselves, the bleeding edge indicators like fuel prices. The Fed is on the record saying that it thinks about politics insofar as it will go out of its way to avoid giving the appearance of taking sides as long as it can reasonably do so within the scope of its mandate, keeping in mind that its mandate is to only pay attention to employment and inflation. It doesn't really give a shit about anything else. It's like the honey badger. It don't care. The pivot is not new or surprising. It began in mid-October, really. The Fed funds rate is still at the cycle ceiling of 5.375. This is restrictive, and if they cut to, say, 4.625 by the end of 2024, it will also be restrictive. This isn't a huge lift to anything. If core month-over-month inflation is running in the 0.1 to 0.3 range, this level of restriction makes sense in a scenario where we're pursuing a soft landing. The pivot would be much easier to impugn if the Fed were actually cutting rates or projecting Fed funds rates that will be accommodative. Bottom line, September was the hawkish defensive outlier in terms of the dots, and December is simply getting back in line with June. The UMBS 6.0 ended the day down 9 basis points to 17, lost 17 basis points, so the 6.0 ending at 101.41 puts us right up here. This is an unusually sturdy Fibonacci line right there at 101.392. So hopefully we won't get any huge surprises out of core PCE tomorrow, and we can just kind of stay there and not have some worsenings. But also check out some stuff from our sponsor at thatmakesense.com. We got the second post of the Yeah But. This is where we're going to discuss both sides of the argument that the mortgage world doesn't suck right now. So there are some arguments that the mortgage world does not suck right now. So check it out at That Makes Sense. And then we also got part 2 of our series from the great book, Influenced by Robert Cialdini. This is all about reciprocity, how to use reciprocity to sell more products.